Welcome to Green Shares channel. I will continue our weekly digest in which we share latest news on the green share energy, and I'll continue with the EVs. And last week were quite a tough one for all the technical tech sector and EVs in general. Technically, we could see the drop of Tesla share to the price of 620 dollars per share. Today, they're closed 686, having been around 700 all of the week. But again, that is after we've reached 760 or 880 in the mid-February. And again, mostly that was because we have the 10-year Treasury yield jumped over to 1.52%, and that actually bring a lot of sell-off for the tech shares during the last week. And despite the fact the stimulus were agreed this Sunday, the shares bounce back, so we could see some activity starting this week. And then again, we have the continuation of the quite volatile market for tech stocks. And in addition to this, we also have some good news on the Johnson & Johnson have been approved on Saturday by FDA as one more emergency use vaccine in addition to Pfizer and Moderna. So that's quite nice to have more and more vaccines, and Johnson & Johnson seemed to be a single shot vaccine which could ease up the distribution a bit. And then we'll switch to the particular companies. We'll start with Tesla. So something weird starting to happen last week. So after months of selling the standard range Model Y and price cut introduced just a week before, they removed the standard range Model Y from the menu, and it is still available to be purchased off menu, but again, not anymore present on their online shop. So that's quite a weird. We already have some comments on Elon Musk with the standard range Model Y to have a range which is less than 250 miles, which is inappropriate for the Teslas. So that's probably the reason to remove the model. But again, we're selling for 1 month and then they have a price cut and then just disappeared. Well, also there were some halt on the Model 3 production in Fremont due to supply shortages caused by the storm in Texas and also the chip supply. So the semiconductors were not in the proper amount, but the factory confirmed that, and Tesla confirmed that the factory already resumed the full amount of production for Model 3 on February 25th. So technically, it was a 2-day shortage of production for Model 3 in the Fremont factory. And despite that, shouldn't actually affect quite heavily the production. The stocks were going down quite heavily. But on the good side, Tesla to have some more good news from India, where the production is supposed to be even cheaper than they do have in China, based on the initiative from Indian government to allow Tesla to have better production costs in their factory in India they're supposed to build quite soon. And also, we finally have some updates on the subscription-based FSD, which should be launched by June. Again, the subscription would be not as beneficial as the entire purchase because the subscription model will be more expensive than the purchase straight away for the FSD. But for those who are not sure or cannot use the FSD due to legislation limitations, that's quite a good solution to have. And yeah, and the last news for today will be related to NEO. So they have their earnings report yesterday, and despite they got a quite nice results of their revenue of 1 point, well, actually more than 1 billion, and the revenue up 148% year over year, and the great results of deliveries year over year, and the most importantly, their vehicle margin gone up to 17% after negative 6% year ago period. They seem to be a missed earnings per share by a bit, and that's resulted in quite a huge drop of NEO shares. Well, we'll see how they proceed further on. According to the amount of vehicles they produced, and they have a record high, more than 7,000 vehicles purchased in January, so Q1 should be good for them, and eventually we'll see later on. But again, the small miss on the earnings per share will actually result in quite a drop. But hard to say because you will see all the shares kind of in red for quite a while because of the sell-off and the 10-year yields. Anyway, that's all for today. Thanks a lot for watching and see you soon.